Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Thursday, May 30th. You're tuned in to On Trend, the show designed to keep you on the right side of the trend. So we've got an interesting spot for SPY, oversold at the 200-day, could give way to a bounce. New lows have expanded. We're going to look at several semiconductor stocks that are oversold and at support and show you a potential play on Palladium. So we're at quite an interesting juncture right now because basically the S&P 500 is oversold and at its 200-day moving average and in a long-term uptrend. And so why do I think it's in a long-term uptrend? Well, we have this 52-week high about 4 weeks ago, so it's not that long ago. We're down like maybe 5% over the last 20 days, and we're right at the 200-day moving average. So we haven't broken below the 200-day moving average yet. So, and my indicator table is still net bullish, but it's going to get less bullish because as I'll show you, we had an expansion of new lows in the indexes yesterday. But, you know, if you look at it on the face of it, the S&P 500 is at kind of a make or break point, and at the very least, we can expect a short-term bounce. Now, this also brings up the issue of time frame. All right, if somebody says I'm bullish, well, you have to ask over what time frame. Somebody says I'm bearish, what time frame are you talking about? Now, when I look out over what I would call basically as long as I can get is 4 months. 3 to 4 months is my long-term time frame because I'm going to get a signal on the chart that's going to tell me, hey, move aside. Haven't gotten that signal yet, but as I said, we've had deterioration that would suggest the next 3 to 4 months could be treacherous. In addition, we do have the weakest 4-month period starting in June. Now, if you look short term, we're clearly in a downtrend, and that downtrend is defined by this decline over the last 20 days. But the thing is, this downtrend is getting quite oversold. Also note short term, we're at that turn of the month period. And what does that mean? Well, the turn of the month typically has a bullish bias. And the turn of the month goes from the last 4 days of the month and the first 4 days of the next month. And so we're kind of just in the beginning of that first 4-day period, last 4-day period of the end of the month. So that'll be today and tomorrow. And then we'll extend into next week for early June. And so that's typically when money goes to work for portfolio managers and stuff. And that's what kind of gives it a bullish bias. So when we look at this chart here, this is SPY, and what I'm seeing here is that we've got some oversold conditions again. And so the green lines show when RSI moves below 30, there you can see, and the percentage of stocks above the 20-day EMA moves below 30%. And that happened in mid-May, and it also happened here in the latter part of May. So if we go back up and we scroll and we see how that first period, you had a gap down, an indecisive candlestick, and then we got a bounce that lasted 3 days, basically. And now we're oversold again. And if you scroll down, you can see for the first time the stochastic oscillator has dipped below 20 to become oversold. So it too is oversold. And then we look at the rate of change. The 20-day rate of change, which is when the market peaked 20 days ago, is 5.36%. So, you know, that is not a trend-changing event, a 5% decline. That's still a garden variety style of decline. But the main point here is that we're at the 200-day, we're oversold, and that could give way to a bounce in the coming days. In addition, we got that turn of the month thing coming on. Now, as far as I'm concerned, the S&P 500 and SPY are the two main things to watch. You know, you can watch SPY just as well because it's a proxy for the S&P 500, but the rest of the market is going to go the way of the S&P 500 99% of the time. So if the S&P 500 gets a bounce, that usually means QQQ is going to get a bounce, and IWM, the Russell 2000 small cap ETF, is going to get a bounce. And if we look at QQQ, we can see a similar setup I'm not putting the 200-day because the 200-day really only works for the S&P 500. It doesn't work that good for QQQ. But look at that. Okay, we got the gap down. And you can see you get that gap down, you get that sharp decline. The world is going to hell in a handbasket, and we get a bounce. All right, we've got another breakdown. We've got another gap. We've got another lower low. Indecisive candlestick yesterday. And if we scroll down to the indicators, you can see that the RSI 5 is below, it's been below 30 for a couple days now, and the percentage of stocks above the 20-day EMA has been below 30%, and the stochastic oscillator moved below 20. So all three of those are oversold, and QQQ is down around 7% over the last 20 days. So we're clearly oversold, and there you can see the green dash lines mark the previous oversold conditions, and we're getting a little more oversold since that first one, but this does suggest we'll get at least a short-term bounce. And we'll take a look at IWM because you can see it is the only one that moved below that low, so it's got a lower low working, but it too is oversold. There you can see the previous time RSI moved below 30, and the percentage of stocks above the 20-day EMA moved below 30 there 4 days ago, and both of them moved below their oversold levels yesterday again. So IWM is getting quite oversold and also ripe for a bounce. And there you can see these indicators. Stochastic oscillator remains below 20%, above 20-day EMA remains below 30%, and RSI is doing its third dip below 30. So here is the base case chart that we've been working with. There was a sharp decline, a pennant, and a breakdown, and walking down the lower band. Now that we've had some new price action come forth and some new setup possibilities, and the fact that we're oversold, we need to probably make some redrawings here because that pennant now is not, the pennant's already happened, is basically what I'm saying. So we need to re-annotate this to take into consideration new price action. And, you know, we're still right at the 200-day, and you can see that this pennant could be forming into a wedge now. This whole decline could be a wedge. And I'll move that support break, and I'll put it right at that gap there. And so that is the resistance level to watch. If we move above this 285 and change level, then we will have broken above the wedge line and filled that gap, and that would be a bullish development from a pattern standpoint. So this is something to watch for if we get a nice strong surge off of this 200-day and we get follow through above that from a pattern standpoint. Now, I also talked about walking down the lower Bollinger Band in a downtrend, just like you walk it up in an uptrend. All right, so that is happening right now, but there's also something else possibly happening, and that would be what we call a W bottom. And Arthur Merrill did the W bottom, and that's basically 1, 2, and then that would be the W bottom. And then Bollinger added to that setup the W bottom, and he theorized that when you move below the lower band, and then you bounce, and then you make a lower low in price, but you hold above the lower band, then that could set up a bullish reversal. So if we look at percent B, you can see on a closing basis, we moved below the lower band there in mid-May. We bounced, and now we pull back, and we're holding above zero on a closing basis. All right, on a lower low basis, we did go below the Bollinger Band, the lower band. Bollinger Bands are calculated on closing prices only, so probably makes sense to use closing prices for your signals. But we're holding above the band on a closing basis, the lower band, and that could give way to a bounce. So it looks like we might be setting up for a bounce in SPY. So keep in mind, if you need to know anything about anything related to the charts on this website or the indicators, you can always search. For instance, if you want to learn about Bollinger Bands, you could search for Bollinger Bands, and there's a Chart School article. And there is even a System Trader article on the turn of the month strategy. So I search for System Trader with no space and month, and you can see there are no support articles, but if I click that blogs button there, I will be taken to a list of articles. And you can see there's the System Trader turn of the month strategy, and I tested that strategy in March 2018, probably time for an update. And so what I found was that if you did the turn of the month, you can see that there was a clear bullish bias for that 8-day period. You had a compound annual return of 7.52%, exposure just 38% of the time, and percentage of the times it was up was 66%. So we got an expansion of new lows yesterday, and on this chart here you can see I've got the high-low indicators for the S&P 500, S&P mid-cap 400, and S&P small-cap 600 there. You can see exclamation point new high SPX is a symbol there, and exclamation point new low SPX. And then you just switch out MID for mid caps and SML for small caps. But you can see here we had 36 new lows in the S&P 500 and 0 new highs. And if you look back, that is the most new lows since the latter part of December for all 3 of these indexes. And small cap new lows went below 60, which is 10% of the total, went to minus 80 or 80 new lows, and that's the most since late December. So you can see here we have 80 new lows and 4 new highs. And so keep those 2 numbers in mind, because now we're going to look at high-low percent, because that is related to these 2 indicators. So if we look at small cap high-low percent, we had basically 4 new highs and 80 new lows. So that's 4 minus 80 equals minus 76. And we do minus 76 divided by 600 to get high-low percent of 12.76. And there you can see that number there. Now on this chart, you can see the red arrows show when high-low percent moved below minus 10%, and all 3 did in October. And I added the NASDAQ 100 just for good measure here. It also had a move below minus 10%. But as far as my weight of the evidence approach, I look at the 3 indexes here. I don't look at the NASDAQ 100. As all the stocks in the NASDAQ 100 are also in the S&P 500, so there's a bit of redundancy there. But more importantly, you can see in February, S&P 500 high-low percent got above plus 10%. It's the only one that has been above plus 10%. Small caps and mid caps did not get above plus 10%. They could not get that critical mass in the number of new highs to support an uptrend, and that's reflected in their respective indexes because they didn't hit new highs either, whereas the S&P 500 did. And now we can see high-low percent hitting minus 8% for mid caps, and of course minus 12.67% for small caps. So if S&P 500 high-low percent goes below minus 10%, that would flip the weight of the evidence to bearish on my index breadth table. Now keep in mind that's a medium to long-term signal, I think, that would be valid until it's invalidated. That's basically the way I look at signals. You take a signal and it's invalidated when you get a counter signal, and you don't know how long a signal will last or the duration of the move after that signal. We just don't know that. So the best we can do is take our signals and accept them until proven otherwise. So if you look at the NASDAQ 100 one more time, you can see that it had a whipsaw in early 2018, below minus 10% and then above plus 10%, but stayed strong until October and then had that move up in February. So that was a signal that there was leadership within the NASDAQ 100 there in February. So we can also break down these high-low percent indicators by the sectors here. And I've got the big 6 sectors first. These are the 6 biggest sectors, and they account for like 78% of the S&P 500, the lion's share of the index. And I noticed that one of the 6 has high-low percent moving below minus 10%. And that would be consumer discretionary. And that is, of course, because of weakness in retail. Now we can see that we're having some deterioration in industrials with some new lows, but we've yet to get below that minus 10% threshold. Consumers, communication services, also deterioration, but yet to get below minus 10%. And we can also see technology deteriorating, healthcare deteriorating, finance had a new low. So, they're deteriorating, but we've yet to see enough of them cross below minus 10% to turn this group bearish. And I've got another chart that shows the little 5, as I call them, which is the other 5 sectors. And we can see an interesting development in consumer staples. I showed the bearish breadth thrust in consumer staples in yesterday's Arch charts. And there you can see high-low percent has moved below minus 10%. So I would be staying away from consumer staples. Energy has been bearish the entire year. It never flipped bullish. Utilities remain bullish overall. So does real estate. But if you scroll down, if I scroll down, you can see that materials went below minus 10%. So we have a fresh signal. We have 2 fresh signals in materials and in consumer staples. So this is going to weigh on my weight of the evidence approach, which will be updated tomorrow in the weekly market review and outlook. And that is behind the paywall. So you have to be a member to view that. Now I'm going to move to semiconductors because semiconductors got to be the most unloved group in the month of May. However, even the most unloved will usually get some sort of bounce at some point. Timing that bounce is always difficult, but we're at a possible inflection point for semiconductors. And I'm going to start with the SOX index, and then I'm going to look at some key stocks in that index. So all these charts are going to show Bollinger Bands. And then in the indicator window, I've got RSI 10, and I've got the slow stochastic oscillator. You can see the RSI 10 is below 30, stochastic is below 20 and oversold, and percent B. So you can see that we had moves below the lower Bollinger Band as we move lower. But when we look on the price chart for the SOX here, we can see this resistance zone that was broken. So we had a little bit of a breakout, a big breakout, and that breakout zone turns into support. So we're coming down to that support zone. We also have potential support there from that low in early March. 200-day, we're just below it, but sometimes it acts as support. And I'm sure if we put our Fibonacci retracements tool on here, we can see that the retracement's going to be around 62%. So we're in that 50 to 62% retracement zone. So a lot of things are pointing to support in this area that we're currently at. In addition, we're oversold, so that could give way to some sort of a bounce. Now, whether or not that bounce has legs remains to be seen. And what I've often seen when you have these kind of gut-wrenching declines, you can get an oversold bounce, but often there's a retest of some sort that sets up the bigger low, so to speak. But right now, I think semiconductors are primed for an oversold bounce. So I'm going to close that chart, and I'm going to move on to some of the other key semiconductor stocks. I'm going to go from chart book format here to 10 per page so we can scroll through these easily. So analog devices, man, people could not get enough of analog devices. And what I'm going to do here is get these charts resized so they fit within that window. You can see this window here, well, that we're cutting off the lower indicator there because it's 600 on the height. And so you can do a custom chart size here. And I've got 900, and I'm going to change this to 500, update it. And so you can see now that fits into the window. And what I'm also going to do, well, let's see, I could probably go 550. Kind of doing this on the fly, but it's a little education on how to work with our sharp charts. So you can see 550 fits just barely within that window. We'll leave it. And once I've done that, I need to save it so it sticks. And then I'm going to apply that to all the charts in this chart list. And I can do that with one click. There's a button down there, Apply Style to All, in that chart list. And so if I click that, it'll ask me if I wish to do that. I'll click OK. I'll click OK again. And all the charts in this chart list will now be with that setting I just set for analog devices. So we'll go back to View All, and that'll put us on 10 per page. And then I will recenter this, and we can see that we can now fit that whole chart in the viewing window. So looking at analog devices, it's another one. You know, people could not get enough of this stock just before earnings. And then after earnings, it had this huge correction. But we can see it's coming back to a resistance zone that turns into potential support. So there we have that resistance, potential support. I'm sure if we do the Fibonacci retracements, it's a 50 to 62% retracement. We've also got the 200-day, and we're also oversold. All right, if we look at the indicator windows, RSI is below 30. It just moved above. Stochastic is below 20. And then the Bollinger Band percent moved below 0 3 times. We made a slightly lower low, but percent B is above, holding above 0. So we might have a little mini W bottom here and could get a bounce in semiconductors or ADI here. So if we look at applied materials, it's also at an interesting juncture that could give way to a bounce. All right, you have this resistance zone turning into a support zone here, and we're right in that zone. You can see there is support from these lows here, and we've got the 200-day coming in, and we have that potential W bottom, if you will. All right, there you can see the W forming, and so we could get a bounce here. And then you can see we move below the lower band, bounced, and we're holding above the lower band on this pullback. And down there we confirm that with percent B. Below 0 to go below the lower Bollinger Bands, a bounce, a pullback above. And we can see a higher low in RSI potentially, and stochastic is back below 20. So, you know, what I'm talking about here is an oversold bounce. And it's at an interesting juncture with this 200-day. Now, Intel was absolutely clobbered. You know, it could do no wrong here. You had this gap up, which turned into an exhaustion gap because it was filled. And it kind of went into an island reversal because you almost have a gap up, gap down that overlap, not quite. But it is an island reversal for all intents and purposes here. But this is just a horrendous decline from 58 to 44. Very sharp decline. And you can see the indicators becoming oversold with stochastic below 20. The RSI has been below 30 multiple times, and possibly a support zone for Intel. Look at those lows there from September, October, and December. We're coming into those lows. And if we look at percent B, you can see a move below the lower Bollinger Band. There it is on the chart, moving below the lower Bollinger Band. And then we can see holding above the band as we move to a lower low. So Intel could be prepping for an oversold bounce. Then we look at KLA 10 core. It is stronger than the other ones. There you can see the resistance breakout turning into potential support in the 96-100 area. And if we do Fibonacci's, you can estimate that that's about a 50% retracement. And you can see where RSI is oversold, it's been oversold. Stochastic is oversold, it's been oversold. And percent B moved below 0, but is now above 0. So we're holding above the lower Bollinger Band. So again, we're just prepping for an oversold bounce here. And Texas Instruments, all right, this one is interesting because it hit a 52-week high there. So it's in a long-term uptrend, I would think. And there you can see this resistance zone turning into a support zone. We also have these lows here marking support. And we've got the 200-day coming in. And you can see, you don't always have to put on the Fibonacci retracements. You can kind of just figure it out that we're at about a 50% retracement. Excuse me, that was a different Fibonacci indicator. That was the Fibonacci arc. Sorry, I don't use that. But there's the Fibonacci retracement. See, we're at about a 50% retracement. So again, Texas Instruments could be preparing for a bounce. But the fact that all of these are oversold at these potential support levels, at these retracement levels, and showing a move that held above the lower Bollinger Band. It was a lower low, but it held above the lower Bollinger Band, means we could get that oversold bounce. So now I want to look at Palladium, and I'm doing this in a unique format here. I've clicked View Image. I did a right click over the image here, and I clicked View Image. You can't see that now because I'm viewing it, but it gives a nice black background to isolate it. Probably good for presentations and nothing else. But we look at Palladium here. It's really interesting because, A, it seems to be in a long-term uptrend. Why is that? Well, that's clearly a 52-week high. This is the continuous contract in the upper window. There you can see that symbol $PALL. And in the lower window, I've got the Palladium ETF, PALL. And I've got the 40-week moving average on both. So we hit a 52-week high there. And then we had a pretty sharp pullback. But there's the rising 40-week moving average coming into play. And we can see that this pullback is retraced 38 to 50%. And it looks kind of like a wedge. And if we look at the ETF, you can see a retracement 38 to 50%. There's that rising 40-week moving average. So we could be getting poised for a breakout and a continuation higher. So let's look at a daily chart next. So here I am on the daily chart for the Palladium ETF, and I'm going to hover over it, right click, and I'm going to click that View Image. And then I'll get a nice isolated image. But it's basically just showing you more detail on this falling wedge and this retracement. So there you can see the big advance. We got a really sharp decline, but it looks like a potential A, B, C correction and a falling wedge. And there's that 38 to 50% retracement, which is normal. We had a nice little pop and then a little pullback. And the question is, are we going to get that follow through to that pop and a breakout above resistance and the wedge line? And that would be a bullish development for Palladium. As far as RSI is concerned, a break above 60 would be a bullish momentum signal. So that is what to watch going forward. All right, and this concludes this edition of On Trend. Thanks very much for tuning in, and remember to stay on the right side of the trend, be it short or long.